We are 9 days into the new year, and with the start of the new year, so many people have new goals, resolutions. We always hear about fitness resolutions. We hear about eating healthier, but what about financial resolutions? What about saving more money this year?
Financially fit.
Financially fit.
That's what we're calling it. All right, joining us in today's Leading SA segment is Victory Capital's Manak Dillon. Good morning, sir. Thank you so much for joining us.
Good morning. Thanks for having me.
So right off the bat, why is the new year a great time for a financial health checkup? And what exactly does that mean?
You know, it's time for the new year, new resolutions and new beginnings. And it's a great time to set on your calendar to say, take a look at what's going on financially in your life. A lot can change over the last year, and it's a good time to step back and make sure you're hitting the new year, in this case 2022, head on. It means reflecting on those financial goals you had. Did you achieve everything you set out to last year, whether that was from a saving, investing, or budget perspective? You know, things might be different. People might be trying to save for a house. Maybe they had a baby and they want to figure out how to save for their college education. So it's a great time of year to do that.
So what would you say are 3 things that people can keep in mind financially for the new year?
First and foremost, make a budget, review a budget. So take a look at the last year. Did you spend money in the places you thought? Did you maybe things came up that were surprises? And I always like to tell people, don't forget to pay yourself in that budget. You know, oftentimes we sit down and we look at all the places that our money goes. There isn't a line item for ourselves in terms of savings and investing. And that's really then the second thing, save for a rainy day. We know unexpected things happen. We just went through a terrible pandemic. Save for a rainy day, have enough expenses off to the side, and then invest for the future, not only yours, but also your children's. And, you know, this can mean start investing if you haven't already, or if you're already investing, taking a look at how you're going about it. You don't need a lot of money to get started. That's, I think, one of the things that people don't understand. You know, we have clients that call us every day to start an automatic investment plan with $50 a month. And that's something that is achievable for most folks. And they can take advantage of the compounding the market offers, as well as they don't have to try to time the market that way. It's a great time to look at your existing portfolio as well, like your 401k plan, your retirement plans. And then don't forget the kids. Those education savings plans are a great way, and you know, nowadays you can use them for more than college. You can use them for high school, middle school, and elementary.
Now, 2021 was kind of, I don't want to say easy, but in perspective of history, it was a less volatile year than we've had in years past. So what are you telling clients about investing in the markets in 2022?
Well, first of all, it's about always remember the basics. Right? Make sure you're investing and you're investing enough to meet those goals you have. Take a look at, like I said, those retirement plans, those contributions, and what you're setting aside. And then the next thing is, are you diversified appropriately? And what that really means is, do you have the right mix of different assets? So this could be bonds, this could be stocks, could be real estate and other things, commodities. And don't try to time market swings, right? You mentioned last year wasn't as volatile, but this year perhaps could be. So you don't want to try to time the exits and the entry points or chase that hot dot from a return perspective. But once you've gotten through those basics, it's going to be an interesting year. A lot of focus is going to be on the Federal Reserve. There's going to be a lot of focus on interest rates and inflation, like we've already heard about. And those aren't just things that Wall Street needs to worry about. They're going to impact everyday life for everybody. And so it never hurts to seek out an expert to discuss ideas. You know, every day we have thousands of investors that call us to help navigate or understand what's going on in their portfolio in the market and talk through issues like these.
What about cryptocurrency? That's kind of the big trend right now. What would your advice be for anyone wanting to get into crypto?
Yeah, it's definitely an interesting new space. You know, the underlying technology behind it has the potential to be quite disruptive for all things we deal with in everyday life. You know, it is appropriate for some people, you know, but they have to step back and think about, can I handle the volatility? When should I allocate? Which one should I allocate to? I think it's like anything. It's like building a house, right? You have a foundation of your portfolio, and then you start to put up the walls, and then you do other little things. You know, it's never a good idea to have all of your portfolio in something as volatile. So I think it's something people have to step back and take a look at, back to what are my goals? What am I trying to achieve? And does an asset class like that fit into it? And obviously you can tell from the coverage and the interest and the conversation out there, many people have gotten to that conclusion.
All right, Mr. Monick Dillon, thank you so much for your time this morning. Really appreciate it. And good luck to everyone out there listening for 2022 in the future.
Thanks for having me.